welcome back to BlockTV, and it's time to say hello and congratulations to Nathaniel Whitmore. His Long Read Sundays hitting the year mark. Happy birthday.
Yeah, thank you. Thank you. It's good to be here.
Excellent. So tell us about it. I mean, people can check out what you've been writing about or what you've been curating this week, and then really a retrospective going back a full year from now, a full year back. Definitely worth reading, but let's get into this week's edition, and we're starting with a new fundraising option for the crypto business, and we're talking about auctions.
Yeah, so first of all, this is a pretty bad week to choose to be the 1 year anniversary, given just how much was going on. Not a lot of time for retrospective when there's so much to look going forward. And I think one of those kind of actions was this Algorand auction. So Algorand is a new base layer chain. It has a really storied team that a lot of people are excited to see what they do. But the interesting thing about this was pretty much the dynamics of the raise. So Meltem really captured, I think, the excitement about this, or at least the what was so impressive about it. So they effectively did an auction where people could bid at the price that they wanted, and if the price came down from a starting point of I think $10, they got their bid, and if not, they missed it. And they were able to raise something like $60 million in just a few hours at an implied market cap of something like 24 billion. And so that obviously sounds just pretty astronomical. Now, one of the interesting dynamics of this particular auction is that 90% of the purchased tokens are redeemable a year from now. And so Algorand effectively has to keep them in escrow. And the interesting thing is the buyers can, move them around and trade them at first, or, do things with them over the course of the year. They just have to have the original buying address a year from now to actually take advantage of that. So it really, I think for a lot of people, what they were excited about was both a really good project plus this de-risking in the form of this 90% escrow. And so, a lot of people were saying and responding that really this was more like they raised $6 million, not $60 million. Mm-hmm. And I think that, there's a couple ways to look at this, or a couple of things that matter about this. One is there's clearly market demand, right? It's not just the Bitcoin price. People are buying tokens. And, I think this has been clear from what we've seen with IEOs, but, this is a pretty marquee project. So I think it's as an indicator of market sentiment, it's pretty positive. A second piece is the sort of cynical or skeptical take is this is just another way to financially engineer, big valuations and crazy inflated raises. And I think that there's reasonable to take that opinion just based on what we've seen. But on the other hand, I think that part of what is happening in crypto in general is experimentation with the right way to do capital formation. And maybe this idea of something like, a 90% return policy, maybe that just becomes a part of what people want out of these types of companies, and really they just stumbled into something. So I think it's notable from the standpoint of where the industry is, and I think it's going to be really fascinating to watch how it plays out over the course of the next year. This will not, by the way, be the only auction they do.
That's what I was going to ask. I mean, is this something that they can do with other tokens, with other companies? And also, I mean, what does this mean for regulation? How would the authorities, in the U.S. I'm talking about for now, look at this kind of fundraising option?
Well, I think that the, again, having no particular experience with the regulation and the legal side of things, I don't know if this addresses any of the potential questions around securities law. I think that that's still a pretty open question as it relates to tokens. However, they did it with CoinList, who obviously does their best to be compliant. They did not allow U.S. investors to participate, which is notable, which is kind of a whole different theme that we've talked about a couple times over the last few weeks, is the kind of geo-blocking of the U.S. So so I don't know how much impact this has on regulations, except insofar as, I could see you making an argument both ways. I could see you saying that this sort of 90% is an investor protection and an example of kind of good faith on the part of these companies, but it also could just be seen as financial engineering. So I think that's a TBD, but it's certainly going to be talked about in regulatory meetings, that's for sure.
All right, so that was our number 5, and number 4 is, sorry to take you back, but it is regulation on an international scale. We're talking about the FATF and their guidelines that was issued really, I think it was earlier in the day, just before Bitcoin had crossed that 10K mark. This came out, the announcement that exchanges would have to keep customer or client information on a scale that we haven't seen up until now. What can you tell us about it?
Yeah, so I think that this is something that's been talked about for a while. The Financial Action Task Force, we expected kind of this guidance to come out, and there was going to be recommendations to governments around specifically crypto assets, and people were nervous just in terms of what it might mean. I mean, basically, any time that there's a chance that for regulatory overreach through lack of understanding, the crypto community is going to get nervous. Right. And so the interesting thing about this was the way that the announcement was made. So the U.S. Secretary of the Treasury made a very kind of aggressive statement about how crypto assets and virtual assets would not be allowed to be used by rogue regimes and sympathizers of illicit activities. And these are obviously direct quotes from him. From Mnuchin, yeah, and so it seemed incredibly kind of hostile. And in fact, my first tweet about it was, it's a hell of a way to start a war on crypto. Now, what the interesting thing is that for people who pay attention to these things in great detail and whose job it is to understand the actual implications, so folks like Coin Center and folks like Jake Chervinsky, who's a lawyer in the space, it actually wasn't anything new. And so to the extent that those that kind of talk was aggressive, it was mostly just positioning and reinforcing sentiment. So basically, both Coin Center and Jake echoed this point effectively, that this didn't represent anything in particularly different than what had already what is kind of already the norms, right? And in fact, this kind of seems to reflect a parity with the feelings about FinCEN. He also points out that this body was created specifically to fight, money laundering, and specifically with an eye towards terrorism and global terrorism. And so, of course, that's the lens through which they're looking at crypto assets, right? So, the interesting thing about this is that I think that it does matter. It's important to note, especially any time for me, I think, when there is global regulatory collaboration, or I guess you could call it collusion, depending on your perspective. But that's really interesting in the context of crypto, because kind of the whole point is that it allows for this regulatory arbitrage where you move between jurisdictions to suit yourself or to suit whatever your needs are. This sort of action, while maybe not changing anything, so far, certainly suggests broader global collaboration around norms, which is going to have impact on the industry.
Absolutely. I mean, we're already seeing some thought pieces on this and how it's going to impact definitely smaller exchanges that suddenly have an onus on them to keep records that they've never asked for. What it might do to the privacy coin market, and whether that'll see an increase, people who want to avoid identification and detection, or the other way around. So I think there are things that'll come out of this, but perhaps the Jake Chervinsky way of looking at this, and I don't know if he's downplaying it, but it's taking it with a grain of salt and giving us perspective on it.
I think the optimist point of view is a reasonable position to take. What I'm watching for personally is that, to me, it feels like part of a larger, one opening kind of salvo in a larger shift in the tone, where regulators are recognizing that crypto assets aren't going anywhere, and that in some ways they could pose a threat to their power structures in real ways. And when I see language as sort of aggressive as came out in that speech, even if the actual action isn't going to follow it, that's building a narrative for future actions as well. So that's kind of the angle that I see. I'm totally fine and optimistic, or hopeful, taking this optimistic point of view. But for me, I'm not kind of keeping out of sight the fact that there's a larger kind of anti-crypto narrative developing, I think, from the perspective of nation states.
Right, and we saw a similar reaction. We'll get right to it when it comes to Libre. Obviously, the biggest story of the week, that we experienced. They announced their white paper and their test net, and they're going in. They kind of walked it back a bit later, saying it's only a white paper and it's only plans, but this is an industry game changer, no question about it, right?
Yeah, oh, absolutely. I mean, I had to fight really hard not to just have everything in here be about Libre, and only yeah, only didn't because, because we had some leaks before we were able to start talking about it last week. So for those who, I don't know, were on vacation, I guess, for like the last 3 weeks. Libre is the new crypto project. It's initiated and has been incubated by Facebook. It's launching with 27 founding member nodes. Founding members have to invest $10 million or more, presumably, into the project, and commit to running nodes, which has a pretty hefty annual cost coming with it. And they're all part of the governance of the thing. So there's caps on how much influence Facebook or any of the other founding members can exert, and there's some pretty big founding members. So this week, last week we got leaks about who those might be. This week we got confirmation. We got to actually see from Facebook, what they were doing and how they were thinking about it. And so, this has been an interesting situation of, there were some parts of this that I think surprised the crypto community. In particular, the way that the governance was structured. I think that most people didn't expect Facebook to do as much to put its own, to reduce its own power inside the context of the consortium.
Seemingly, yeah.
Yeah. Well, this doesn't change the fact that it's still effectively a cartel of hugely powerful organizations who are running this, but at the same time, they have made explicit attempts to draw the lines between Libre, the cryptocurrency, and Calibra, their wallet. So anyway, so there were things that, again, wherever you land on the spectrum, I think that in general people might have been a little surprised, and positively, by that. But yeah, so basically the whole community has effectively just been trying to wrap their head around it and trying to, either have their biases confirmed or kind of rejected. And so, I spent a lot of time this week looking at the community responses, and one that I think was pretty right down the mainstream of what I saw came from Eric Voorhees from Shapeshift, who basically wrote kind of a 20 tweet thread version of what I think a lot of people are feeling, which is there are a lot of positives for this in terms of the way that it's going to potentially expose people to the idea of cryptocurrency and could create a mechanism for onboarding them to cryptocurrency. Yet at the same time, it is still a permission network that, even if it translates eventually to a permissionless network, still has big questions about how that's going to work and how it's going to be governed. People recognize that it could become sort of a whipping boy for crypto. It could drag crypto with it if regulators just don't like Mark Zuckerberg. But ultimately, I think that the optimist take here is that a massively large new group of people is going to be exposed to the cryptocurrency industry for the first time. And that creates both, actual practical on-ramps in terms of getting, what was once fiat into a digital currency that could presumably be traded later for things like Bitcoin or other crypto assets. But it also creates kind of an intellectual on-ramp and an exposure that could be, ultimately the most important point. So I think Eric's thread really captured that sentiment, which I saw a lot from a lot of different parts of the industry.
Now, when Facebook or Libre rolled this out, so it came together with an embargoed press release that select publications got, but also came with some direct communication from the leadership of this project. How do you feel they introduced it to the public?
I mean, I think they did a good job. I have one little factoid point on this front. So I guess a couple hours into this, I did a Twitter poll, which, to be clear, is basically a selection bias for your own followers more than a definitive statement. And so I asked, gut check, after seeing this announcement, are you more excited, more nervous, not sure, or who cares buy Bitcoin. And so, again, going back to the follower bias, I think 60% of my followers said who cares buy Bitcoin, which was to be expected. However, when it comes to the more excited versus more nervous, it was like 25% said more excited, 5% said more nervous. So to me, what I saw, and this got, hundreds of votes. So 5 times the number of people were more excited and interested after seeing it than they were kind of more nervous. And that could be just an initial gut reaction. It could be, great video that they produced, or who knows. But I think that they actually did a pretty good job. They've been seemingly accessible in terms of, actually engaging with critique as well, although we'll get back into that in just a minute. So I think that the launch of the idea was a success for them. I think that they have, an opening to potentially convert more of the crypto community, let's say, to allies. Maybe not so much on the regulatory front, though. So that's kind of the next thing, I think.
All right, so let's dive into that, because there were reactions from several nation states. We're talking about France, who say or kind of want them to just stop. Even in the States, definitely Europe is looking at this with a slant. This isn't even going to launch in India. So a mixed bag of reactions here. I'd have to say, I'd say it's leaning to the negative when it comes to regulators.
Yeah, so, quick hits. I think France was the first to comment. And again, it's important to have context. It's the same French minister who called for a ban of all privacy coins, so this wasn't super surprising. I think that around Europe, there were some pretty, aggressive reactions. I think probably the most aggressive reactions came from the U.S. Obviously, big tech has become fodder for Elizabeth Warren and pretty much all the Democrats running for president. So no surprise there that they came out against it. I think Elizabeth Warren tweeted the next day something to the effect of, they already have too much power. We can't allow them to access more data, yada, yada, yada. The largest or the kind of loudest response was Maxine Waters, a congresswoman who called for the project to actually halt until they could, understand what's going on. And again, she used the same kind of anti-Facebook language that we've been seeing for a while. All of that's political, right? That's the expected political response. You also had, some of the Democratic candidates carving out a different position. Andrew Yang, who's obviously a very pro-innovation candidate, said that it could be something that was really valuable. But I think, take this all together, and what's clear is that, again, there's a growing recognition on the part of politicians everywhere that crypto assets seem to be a phenomenon that is here to stay and has implications for them. In fact, in an interview, Congresswoman Waters actually said something to the effect of, they can't go to Switzerland and we can't allow them to just go to Switzerland and compete with the dollar, right? Like that's a level of recognition that, while obvious in some ways to those of us in the industry, is just starting to show up. I think it was only a month or two ago when Brad Sherman made the same point, that the end game is actual competition with the dollar as the reserve currency. And so you kind of saw this in the crypto community. Andreas made this point that it actually, Libre was not competing with Bitcoin so much as it was competing with retail banks and central banks. And then I thought Amin's perspective, so Amin is the CEO of Spank Chain and used to be at Consensus. He effectively wrote that there'd be a national cryptocurrency Hunger Games, where nations try to kind of have their currencies, related to Libre in some way, to be running nodes. And I think that this is one of the more interesting things. We talk a lot about how Bitcoin and other crypto assets might impact things like the US dollar as the global reserve currency. But there's, to me, in a lot of ways, the more interesting implications and more realistic, at least in the short and medium term, are, national currencies that are floundering from, less successful states, at least on an economic level, trying to hedge and jump ship into a different currency. I think that's really fascinating. So it's really interesting stuff. But then again, there were some counter indicators, I guess you could say. So the Bank of England made an announcement, I think the next day or a day after, that effectively they would allow projects like Libre to be able to store their reserve assets directly with the central bank, which is a new thing. That's not something that's not a a resource that's been available to tech companies or anyone but banks traditionally. And so there's a lot of ways to read that. One is that, they could understand that there's effectively just new competition for who the retail banks are going to be. I think that's a real clear indicator that, to some extent, the innovation here may be about, do you bank with Santander or do you bank with Facebook, right? With Libre. So I think that's one piece. I think another piece is, in all the stories that we saw about Libre leading up, they had clearly engaged with Mark Carney and the Bank of England in a direct way. So to some extent, this could also just be the triumph of engaging with people proactively, and regulators or just people in positions of existing power proactively before making the announcement, because it seems like a lot of the folks who are the most contentious about this did not have that sort of outreach. So again, I think that in general, the reaction from regulators and from the existing power structure has been, if not outright hostile, a lot of like, hey, we need to be brought up to speed, and we need to be brought up to speed right now, and we need to have a seat at this table. But there are some who are seeing that this represents something innovative, and they want to be a part of it as well.
And to be fair, I think Facebook is very aware of that. I mean, we heard Sheryl Sandberg kind of say that they're going to go hand in hand and kind of consult with regulators throughout the process going forward, and might even revisit some of the things that are in the white paper. So it seems like they're aware of the criticism. They're aware of this package that they dropped on the international financial sector's doorstep, and will be taking that into account going forward. Also has to be said, though, that Facebook is already under in the sights of legislators. We know that there's a Department of Justice investigation, there's a Fed investigation, so into other aspects of Facebook. We're talking about antitrust issues. So it's a perfect storm, and it's all during an election year where Facebook's power is huge. So everything has to be taken with that perspective in mind as well. But let's move on to your number 2, and so this is a major issue. We're talking about Facebook and privacy, and the concerns that people in the crypto community and people outside of it might have about the levels. There's just too much in one company's hands.
Yeah. So I mean, this is the central fight, I think, in a lot of ways, the central area of concern, the central challenge. And I think there's this very strange dynamic playing out where there's a bit of a rock and a hard place for Facebook, because on the one hand, trying to be a global regulatory compliant, or build this institution in a globally regulatory compliant way means taking into account the focus of the state, which is security, right? And surveillance is the means through which security happens, at least in their minds, right? This is what AML is about. This is what kind of global bodies like the FATF are about. They want to prevent illicit flows of money between criminals. And to them, privacy is something that's sacrificable for that. Now, at the same time, on the other side, those same politicians are concerned with the privacy of their citizens and the data policies that the companies that deal with their citizens have. And so this is the great tension of the technology moment that we live in, is surveillance versus sovereignty, and privacy versus security, at least security as it's defined by the state now. And so as part of kind of the whistle stop speaking tour after, David Marcus effectively presented privacy as a tool for criminals, right? Which is an argument that has always been used as a way to kind of get around privacy concerns, right? It's like, who cares unless you have something to hide, which is an incredible fallacy on a huge number of levels. But crypto community being who they are, they quickly call them out for it. So you have Udi here, who actually has, as someone who jokes about being kind of an irrepressible troll, has actually been really pretty even-handed and deep in his analysis of Libre. And in this case, he really went to town because it's just that this is a sentiment that we've heard from the biggest kind of opponents to privacy, is this idea of it being a tool for criminals. And so they engaged, and effectively, the argument back and forth, and this happened in a number of different places. Zuko, the kind of founder of Zcash, jumped in on very similar levels. Zcash's ZCon 1 was actually this weekend, and this is a big topic that they were talking about. Marcus effectively was saying it's impossible to have privacy on the base layer. That'd be for other projects and for wallets, and you can make those decisions. And really, it was not convincing to a lot of the folks in this industry. And I think that this is, if you want a preview of where the real battle lines are going to be over the next, years as this comes or doesn't come to market, it's going to be in this area. Mm-hmm. And what tension they're feeling from all sides, from the public, from regulators, and even from regulators on both sides of this. So I think it's going to be fascinating to watch. But I think that there's one other thread that I wanted to point out, right, because it makes it not just theoretical, right? Like, those of us fortunate enough to have conversations about privacy and surveillance in mostly fine contexts don't really always remember that this is a real lived issue for people. And so Sarah Jamie Lewis, the head of the Open Privacy Foundation, pointed out that if you talk about privacy only being for criminals, for people whose way of life is criminalized, rightly or wrongly, they're dealing with that now. So for groups like sex workers, this means they're basically just having every part of their life further pushed into the underground, right? And pushed away. So the point here is about the fact that this is real life for people, and that when we have incredible tools of surveillance like Libre is potentially going to be, it creates really, really serious challenges. So again, these are issues that we get to theorize about, but other people have to live within, and it's really important to keep that context as we discuss them. Yeah, very important to note out. Nathaniel, thank you very much. You gave us a lot to think about, a lot to talk about tomorrow morning as well. Appreciate all the hard work, and I'm going to suggest to people go into that retrospective. Maybe we do another segment on that later in the week if you have the energy. For now, you have plenty to look at, plenty to read in Long Read Sunday. Thank you for being with us. For those of you at home watching us, don't go anywhere. We're going to be right back.
For more news and updates, follow us on Twitter